Students మరియు వర్కింగ్ అకౌంటెంట్స్, వెల్కమ్ టు మై స్మార్ట్ టాలీ ప్రైమ్ యూట్యూబ్ ఛానల్. My name is Baburao from Hyderabad. Before proceeding to our topic today, just an advice for you. If you want to gain expert knowledge in Tally Prime GST and become expert accountant, please follow and view all the videos, all my videos in my channel, in the same order in which I uploaded the videos. If you do that, you will gain good knowledge, that is expert knowledge, and will become expert accountant. If you skim some videos and go further, see some videos, again come back. Like that, if you see, you will not get matured. Very good, knowledge. Okay, that is very. And one more thing is, I started along with this videos, this channel videos in this channel, completely free, you can learn. And I started online classes also for this Tally Payment GST online classes only. And offline classes is not possible for me, so I started only online classes. And within few days, mostly on first or second of this May, because first May is a holiday, May Day in India. So second of May, I am going to start a new batch for the Tally Prime with GST. If anyone is interested to join the classes, but this one more thing is, this all the videos in this channel, they are completely free, but these online classes, they are not free, they are only paid classes. If anyone is interested to join these paid classes in online classes, you can send your names and register your names, send your details and send, register your names. For that, my contact details are given in the about section in my channel. So we have one mobile number and email address, so you can send details to email, or in the case of mobile, you send only the message only through WhatsApp, all your details, and I will call back to you. Because if you call me, I will not get the call because I am in another country. I will be here for 4 days, 4 months, around 4 months. So you send only WhatsApp message with all your details. I will call you and I will talk to you. And from 2nd of this May, I am starting new batch, and I posted this. I posted this message in the community section of the channel, as well as today I am uploading videos in English until I am uploading a video also about these classes. So if you are interested, you can join and send your details, and we will start from 2nd. Okay. And the next one is, every video I used to say this, I used to tell you at the end of the video, but now I decided it is better to tell you in the beginning itself. Everyone who are visiting my channel, please subscribe my channel. If are not already done, already subscribed, so that's all. You cannot subscribe second time again. Only once you can subscribe. If it is you are subscribed, otherwise definitely, surely you subscribe to my channel. Just don't simply see the video and go off. You subscribe to my channel, and then you click the bell icon and select all option. You will get notification for all the videos which I am uploading. Okay, and then you share my channel with all your friends, and also anybody who want to learn Tally Prime with GST. Their students are working accountants, but you share with them also. And while watching this video, please watch the video till the end of the video. Don't skip the video, because if you take up any topic, the details regarding the topic, any rules, any settings, all these are usually discussed in the beginning. And after that, so we will go to the Tally Prime, and we will teach you. I will take up how to implement these rules or settings in the Tally Prime, and how to record in the Tally Prime. So if you see in the beginning, just like theory, it will be like theory. So after that, if you skip, you cannot understand how to make the transactions or record the transactions in the tally. That's right. Watch the video till the end, and after watching that, just you like my video definitely. If the video is good, you like the video, just click the thumb icon and like it. And below the comments, I mean below the description box, there are comment section. In the comment section, you please definitely post your comment about this video. How is the video? Is there any problem, or are you not able to understand anything like that? You post your comment about this video, then I can understand how you are receiving this, and this is the only communication between you and me. Okay, so definitely post the comment now. Now we are entering our topic. So I am sharing the screen. Okay, so here today's topic is what are the GST reports in tally frame? What are GST reports in tally frame, and how to view the GST reports table wise? They are called GST1, 2, and GST3. So actually, what is meant by GSTR reports? Actually, every businessman, we are recording in the transactions regarding in the books, that is in tally, but every month, that is the person, every registered person, they have to file a return, that is a statement regarding his business to the government. It is called through the website called GST portal. So through the portal, you have to file a return. The statement is a return, then called as return. So return we have to file to the government regarding our business. So here, what are the generally the returns will be filed every month. Actually, the registered persons are two types. There are two types. One is regular dealers. They are called dealers, regular dealers, and the composition dealers. The composition dealers are separate and regular dealers are separate. If your annual turnover is up to 1.5 crore, not exceeding 1.5 crore, you can have the choice to register as regular. That's called regular person. You can be registered as regular, or you can take up composition dealer up to 1.5 crore. If the amount, the limit, that is the annual turnover, it exceeds 1.5 crore, if the turnover exceeds 1.5 crore, you cannot become a composition dealer, only you will be a regular dealer. So composition dealer is separate. There are some rules regarding him, people must say, and the other one is regular dealer. We are dealing with regular dealers. In these regular dealers, the regular dealers are again two types. One is return filing the returns every month, and another is return filing the returns quarterly, every quarter. They are called the monthly filers are called regular dealers again. Under the regular dealers, again they are also called regular dealers. That means filing every month. And others are called as what QRMP scheme. That is the persons who are filing the returns quarterly. The scheme is called QRMP, quarterly return. It means quarterly only, but MP means monthly payment. Quarterly return and monthly payment. Even though you are filing the returns quarterly, you have to pay the money every month definitely. So that is the QRMP scheme and the regular scheme. The restrictions are, if your turnover does not exceed 5 crore, that is up to 5 crore, you can file every month, or you can file quarterly also. Quarterly or every month, that is our choice. You can take monthly filing, or QRMP also you can take up to 5 crores. If our turnover exceeds 5 crores, definitely you have to file monthly only, no quarterly choice. So this is called result. And every person, regular person, that is monthly filer or quarterly filer. Monthly filer, when he's filing monthly or filing quarterly, he has to file two returns. One is GSTR1 and another one is GSTR3. And previously there was one for return, GSTR2. It was to be filed, but now it is not filed at all, but it is only useful for us to check up other things in portal. There are two tables, that is two GSTRs called two numbers, 2A and 2B. They will be generated automatically. To reconcile or to check up with them, this GSTR2 is necessary for us. That is why this is kept as it is in this. And all this GSTR1, GSTR2, and GSTR3, as per according to our records, that is amount transactions recorded in our tally, these reports are automatically generated by the tally file, just like debit, just like outstanding report, like that. This is also a GST reports also are generated automatically, and these reports will help us to file they are in the same format like the returns to be filed on the portal. So with the help of this, you can file directly. You can file or from Tally itself, these returns reports you can directly upload to the portal. So now we will take out what are these steps and how they will take. First of all, will be a very vast one. We will take up GSTR 1, and this in the second part. This is the first part. In the second part, we will take up the other two. So we will go to Tally right here. Where you can find the GST reports. For example, stock summary, where you can see here stock items here, and go to inventory books, go to stock item. We are getting like this, where you will get the stock refund in the GST reports. So to get the GST reports, there are two ways every time. See, one is here. Go to and type it here. Just GST. If you type GST to show GST reports, so this is all related to GST reports. In these are the reports to be filed. That is returns to be filed. So here, if you click, you will get the GSTR 1. Or if you are in the gateway of Tally, so reports like other reports, go to display reports, then go to GST reports. So for display reports, short key is D. So if you click that, for GST reports, short key is O. So click that, then you will get the same thing. GST reports, you get the list. In this, these are the three returns which you require. So now we will go to 1. So actually, I'll tell you what is this. Number 1 is related to the sales. That is outward supplies. When you are selling the goods, the sales are called outward supplies. We are supplying outwards to others. That is going out. That is why they are called outward supplies. So in the GSTR 1, the report will generate on the basis of the sales. That is, it indicates the outward supplies. There are many tables regarding them that we will learn. That this is the one. First one is regarding the outward supplies. Second one is regarding relating to the purchases. They are called purchasing means the goods are coming in. That's why they are called. Their goods or services. They are coming in. The supplies are coming in. They are called inward supplies. So number 2 contains inward supplies and GSTR number 2. But this GR number 2 inward supplies, this is not a return. It is only a statement for us. It is not to be filed. You cannot file them. It is not to be filed. But in the GST portal, 2 GSTRs, they are also called GSTR. Only they are only statements only. So there are 2A and 2B. 2 statements will be, 2 GSTRs will be generated automatically in the portal. So this is useful for us to compare this with compare our books. This is GSTR 2 is nothing but our record in our book. So that is reflected in the GSTR report. To GSTR 2, in this report, our transactions that are recorded will be reported. They are generated. So this is used to compare with GSTR 2A and 2B. How they are generated in the portal, that will be there later. And the third one is GSTR that this is to be filed. This is to be filed. So this contains the outward supplies means contains the liability. Outward supplies means sales means when you sell the goods, we collect the GST. That is to be paid to the government. So GSTR 1 contains outward supplies means the tax collected. That means the tax payable to the government. That is called the liability. So GSTR 1 is related to the liability to pay the tax to the government. And GSTR 3B contains GSTR 2 is only for purchases. So on the basis of these purchases, GSTR 2A and 2B will be automatically generated in the portal. So on the basis of those portal, that 2 reports in the GSTR 3B, this liability, our liability to pay the tax is drawn from GSTR 1. From GSTR 1, automatically that will go to the GSTR 3B, that is called outward supplies liability. Liability will go, and on the basis of other 2A and 2B generated automatically on the portal. So on the basis of them, they will be auto drafted. They will be automatically, they will reflect in GSTR 3B. That is when you are, that is called relating to purchases. When you are purchasing, we are paying the tax. The tax is to be, you have to receive get back. That means you will not get cash from the liability that will be adjusted. It is called input tax. Then when the supplies are called inward supplies, that called input supplies or inward supplies. The tax is called, which you are paying, is called input tax. So input tax, we have to get back the credit. That is why it is called ITC. So this 3B contains the liability on the basis of GSTR1 filed by us, and the input tax credit, that is ITC, for which we are eligible on the basis of the two statements, GSTR2, GSTR2A and 2B automatically generated in the portal. So that ITC will be taken to the 3B. So 3B contains GSTR1, liability on the basis of GSTR1 and input tax credit on the basis of GSTR2A and 2B. And the net difference, the amount is to be paid to the government. So what is the amount paid to the government? Or if the input tax credit is more than the liability, then we need not pay anything. So what is the time adjusted, and still we have ITC that will be carried forward to the next period, that is next month or next quarter. So these are the three. So first we will take GSTR1. So in this GSTR1, so these are filed every month by the regular dealers. Under the ERMP scheme, they have to be filed every quarter, April, May, June, 1 quarter, July, August, September, then October, November, December, January, February, March, 4 quarters. We have to file every quarter. Okay. And then here, this is the report generated every month, April 1st to April 30, May 1st to May 31st. So in our case, this is education innovation, all this kind of, what I am doing is I am taking the total period. If you take the total period, Alt F2, so Alt F2, escape. So April to last date, that is from April 1st to 2nd October, we recorded, isn't it? So all this we are taking just to learn the different tables, to learn about this GSTR1. I am taking the total period. Here, this is the format, and in this case, there are this contains 3 parts. One is first on the top, so it is showing the GSTR number, GSTR1. Then our GST number. On the other side, it will show the period. Generally, it will be March, monthly means April 1st to April 30. It is quarter, April 1st to June 30. Like that it will show. I took the total period, it is showing the total period. And next box. Next box contains the number of transactions, that is the number of vouchers. Number of vouchers we recorded in the books, as well as in the book, recording the transactions, any errors in the vouchers. This contains that. So first one is particulars and voucher count. Here in the particulars one, first one is total vouchers. That is total transactions recorded. Every transaction is recorded in a voucher. So total vouchers means total transactions. All the total transactions here, whatever it may be. It may be contra, payment, receipt, journal, sales, purchases, everything. All the vouchers we recorded in the books. They are 57, the total vouchers. And then included in return means the transactions are the vouchers which are included in this return. So in this return means it is relating to the sales only. Sales means sales vouchers as well as debit notes and credit notes. When you are selling, generally we issue credit note for the returns, and for some other reasons also we issue credit notes, and sometimes we issue debit notes also. So the buyer's account is debited when you sell the goods, and to decrease his balance, we credit his account. So we issue credit notes. To increase his amount, then we debit his account. So we issue debit notes. So we issue credit notes mostly, but sometimes we issue debit notes also. So it contains the sales invoices, as well as sales invoices, as well as debit notes and credit notes. This is contains. So all the debit notes and credit notes, all the vouchers which are included, relating to this portal, related to this GSTR1. That's called included in this return, total 29. Total 29. See here, 29 total related to this return. So here are different tables and different particulars. The total number of vouchers are 29. So 29 vouchers are 29 vouchers relating to this return. So this is the 29 return. Okay. And in this, we know already. And next one, including HSN summary. So all these 29 will be included in the HSN summary because for every purchase or sale, that is for every sale, as a seller, the seller when he is selling for the stock item, that is for goods, for stock item, or for service, the particular service, for service or goods, goods item, stock item, we have to give compulsorily, we have to do the HSN code we have to go. For goods, HSN, Harmonized System of Nomenclature, HSN code. For services, SAC, Service Accounting Code. For the anywhere in the world, for that particular goods, the HSN code will be the same in any country. That's why it is international. So that's why. So for every entry, when you are making entry, that is related to goods and services, sale and purchase of goods and services. When you are selling only, we can give. So when you are selling the goods or services, you have to give the codes. So if you give the codes, so that all the vouchers which are related to this one, this return will be included in the HSN code summary. The summary means that I will entering in this again. So let suppose in the HSN code summary, if we give any mistakes, suppose if we miss to give the HSN code to any stock item or any service, if we don't give the HSN code or service code, then it will be a mistake. So it will show here incomplete information in HSN or HIL summary, because incomplete information means the number is not given. The HSN code or SAC code is not given. So in that case, that will be included here. So if it is included here, included in the summary will be less. Suppose total of 29. If there are two vouchers in which we have not given the HN summary, HSN number we have not given. So there is error. So if there is error in two vouchers, the other vouchers, correct vouchers included in the HSN summary, these two will not be included. Without giving the number, HSN code over there in here. So this will show 27, this will show 2. So 27 included and 2 not included. Correction needed. We have to correct that. That means we have to enter that. If you enter that, it will show. Now it is not entering. If there is a number, then if you enter it, will show the details and it will show what is the error. If you correct that, so that this will become 0 and it will be added to that. But this error, that is error in the HSN code, this should show error and it will be recorded. Rectified. That is only to be done, but it will not affect this return. It will not affect this number of transactions here. The details of the transaction. This is number of transactions or vouchers. The details of the transactions here. It will not affect here. Okay, and then here. So next one is not relevant in this report. So out of total vouchers, 29 are related to this return. That means the other transactions, the other vouchers, they are not related to this. So not relevant in this return. So the transactions which are not related to this return, they are 28. So out of 57, 29 related to this voucher. This return means other 28 are not related to this return. So, and then uncertain transactions. Out of these 29, if there is HSN code mistakes, so it will be shown here. If there are any mistakes in the transactions or the vouchers related to the GST details, this is HSN code only. Here, GST details like taxable, not taxable, exempted, like that, as well as the GST number of the for registered person, we have to give the register number, GST number. For unregistered person, the number will not be there. So we have to select the correct registration type. This is regular, composition, like this. For regular, we have to select composition. For composition, we select regular, and also GST number is not given. And for taxable, we have taken not taxable, like that. So all these errors will be shown here. uncertain transactions, corrections to be needed, it will show here. In that case, so out of these total number of vouchers, out of if there is an error, that will not be included in this. That means, so the others only will included. But out of 29, there are 2 errors in the GST details. The other 29 are okay. So in that case, those 2 will not be included here in the relevant section. Out of this, for example, in this 14, there are 2 errors in 2 vouchers. So then it will show only 12, and here it will show 2. That means these 2 are recorded. So out of 29, 2 are errors, only 27 will be included here. It will show 27. But here, this will not affect the number here. It will be only rectified, that's all. But here, that is to be rectified. If you rectify, then if there are errors in this, if you rectify, so it will be included in this, and total will be 29. So this is included, called, this is transactions or vouchers summary. Okay, and the next one is the details of the vouchers. The details of the vouchers here. Voucher number, voucher count. For each one, they are divided into different tables. These vouchers are transactions. They are divided into different tables. For each table, the necessary invoices to be included in that table. So the number of count, the number of vouchers will be given here. And if we enter that, the details will be there. Okay, that will come. So here, then taxable amount, then tax amount, and tax means total tax. This is taxable amount, that is taxable value, and this is the tax amount, total tax. It may be IGST, CGST, HGST, all this total amount is shown here, and the taxable amount plus tax amount will be the invoice value. This is the invoice value. Details are not shown. That is, what is the amount of IGST, CGST, HGST. That also we can see. That I will show you again after some time. After explaining this, I will show you how to know. We see between these 2, taxable amount and tax amount. Before the tax amount, details of the different types. What is the total amount of IGST, what is the amount of CGST, and what is the amount of IGST, CGST and HGST. That will be shown in between these 2. That we will come to it later. And first of all, there are 9 topics, 9 items in this. The first one is B2B invoices. B2B invoices means, B2B means business to business. That means ours is business, we are a registered person, that's why we are filing the return. This ours is business. And the other person to whom we are selling the outward supplies, whom we are selling, the other person also must be registered. If that other person also registered, he is also called registered person, dealer. So we both are registered. So registered to registered is called business to business. Business to business. So only business to business transactions. That is, we are it may be in the state, within the state, or outside the state, that is intrastate or interstate, whatever it may be, that are to be included. But one condition, these B2B transactions, only taxable invoices, only taxable invoices. If they are not taxable, they are not to be added. In this, only taxable invoices. Taxable invoice means it must have a taxable value, then tax, GST, HGST, CGST, or IGST, then total invoice price. So if there is tax only, that is taxable. So this is called actually B2B means taxable supplies, outward supplies. So we are selling. That means outward supply. Sales are called outward supply. Purchase are called inward supply. So outward supplies which are taxable. So these are called all the details of the invoices which are taxable outward supplies. All taxable outward supply details will be given in this. So here B2B, these are the different tables. The number of voucher code is 4. That is, there are 14 transactions related to the business to business registered from us to a registered person. This is the total number of vouchers, the taxable amount, total taxable amount, total tax amount, total invoice amount. Okay. And here, what are the details? See here, 14. So if we enter that, you will get the details, all the names, but all the 14 will not be displayed. They will be displayed only name wise for each person. How many invoices? They will show the tax name, GST number for each GST number of a person, for each GST number of a person. What are the number of vouchers? He is having only one. If you enter again this, you show the details. If you enter again, you will get the just actually the voucher. Okay, and this is one. And next one is we have to show two. What is the number of invoice and taxable value and all the tax details. Here we are showing integrated tax, central tax, sales tax, and the total invoice paid. Okay, like this it will show only the total summary for each person with one registration number. That means for each GST number, the total number of invoices and the total values will be shown. All the 14 will not be shown. Total will be 14 only. Total will be 14, but for each person, the number of invoices will be totaled up. The total will be shown. Okay, this is the first one. This is the first one. Taxable outward supplies and also outward supplies and subject to reverse charge. That you will learn later. That's when you are filing them. Or later we will learn that. So here, this is called here. And this also, if you take Alt F1, see here. So in this case, the details are not shown for each one. So for this one, if you click Alt F1 or Alt F5, it will show the details below that. Taxable sales, these are all taxable sales. Next one is reverse charge supplies. The supplies which you are making, we will collect the tax, isn't it? Taxable supplies means we will sell and we will collect the tax in the invoice. Taxable, reverse charge supplies means we are supplying, but we cannot collect the tax. We cannot collect the tax. They will pay tax directly to government. They are called reverse charge. Even when you are purchasing also, you will not pay the tax, to the supplier. You will pay only the value. Only the good taxable value will pay. Tax will pay to the government directly. That is called, what is called the reverse charge mechanism, RCF, that is there. That we will learn later. Okay. So here, when you are supplying, but you cannot collect. So only your taxable sales we collected. For reverse charge supplies, we supplied the taxable value, but tax is not collected. Because that means the tax is to be paid on them by the buyers here. Buyer will pay directly. So this is the thing. Again, if you want to go, so this is the first one. And then, so we are supplying to a business. That is supplying to a taxable, not a registered person. We are supplying to a registered business. Okay, business to business. Suppose if the other person does not have registration, that means he don't have GST number. That means he is called a unregistered person. In the case of business, he is called unregistered business. In the case of a individual, he is called consumer. So consumer or unregistered. In the case of business, unregistered. So consumer we call them individual, we call consumer, and unregistered business we call unregistered. We call unregistered in the case of business. So either business or consumer, both are combined. They are called as B2C, business to consumer. Both are called as consumer. B2C means, B2B means business to business, registered to registered. B2C is called business to consumer, means registered to unregistered. Okay, B2C. So in this B2B, we have to, these are also only taxable. So B2B, taxable supplies. Even if business to other person is unregistered, we will collect the tax. That is why only taxable supplies, taxable outward supplies, which are taxable. So business to business, taxable supplies to taxable goods, taxable outward supplies to a registered business, to registered persons. And in this case, taxable supplies only, outward supplies, which are taxable to a, in the case of a unregistered person, that is unregistered business or consumer. This is called B2C. But here, in the case of B2C, there are two varieties. In the case of B2C, there are two items. One is B2C large and B2C small. Actually, in the portal, it is not called small, it is called others. B2C large, B2C others. Others means we call it as small, to understand it here. So by seeing this large and small, many people get confused because of these two words, large and small. Many people are just confusing themselves. Many people are confusing. You will also get confused. Here carefully. B2C large, this means unregistered person supply to unregistered taxable outward supplies to an unregistered person. Okay, unregistered person only, taxable supplies outward. But here, what is the meaning of lot means? These taxable supplies to an unregistered person, but it should be supplies to interstate, only outside the state. Outside state supplies, interstate supplies exceeding 2.5 lakh. Each invoice exceeding 2.5 lakh is included, is called as B2C lot. Interstate, it is B2C, no doubt. Taxable, no doubt. But supply to unregistered person and interstate, not in the state. Interstate supply exceeding 2.5 lakh. Each invoice exceeding 2.5 lakh will be called as B2C lot. So interstate, B2C means unregistered, taxable. Okay. But the supplies are more than, the bill invoice value, that is the value of the bill will be more than 2.5 lakh and more than 2.5 lakh, and it should be interstate. So interstate supplies exceeding 2.5 lakh, simply interstate supplies B2C, supplies to an unregistered person. Interstate supplies you can collect as, and for interstate supplies to an unregistered person exceeding 2.5 lakh only, that is called as B2C lot. You see, there are two items are there. If you see this, see here, there are same name is there. One is 3.5, 3 lakhs 59,900. It is about 2.5 lakh. Another one is 3,79,960. It is the total value. It is more than 2.5 lakh. That's why they are called as B2C lot. B2C lot. Only exceeding 2.5 lakh and only interstate. So here you can see here certain code. So if you go here, we are seeing the details. Again, if you enter, you get the voucher. So here you check out. See here, you see unregistered. So Andhra Pradesh, unregistered person in another state. So this is the thing. So interstate supply to an unregistered person, interstate supply to an unregistered person exceeding 2.5 lakh only. This is called as B2C large invoice. The next one is all others, that is interstate up to 2.5 lakh, not exceeding 2.5 lakh. Interstate up to 2.5 lakhs, intrastate within the state, there is no restriction on the amount, irrespective of it, even if it is 10 lakhs. So by seeing 10 lakhs, don't feel it as large. 10 lakhs within the state means it is B2C small only. Only interstate exceeding 2.5 lakhs, that is called as B2C large, or all others, that is any amount within the state or up to 2.5 lakh in the case of interstate, they are called as business to customers small. See here there are 4. You see here. You see here. Here see interstate means Andhra Pradesh, Tamil Nadu. In the case should not be more than 2.5 lakh. See here Andhra Pradesh, it is 36,000. See 36. Sorry, not 36 lakhs. It is 2,36,000 one invoice. And then in the case of Tamil Nadu, see this is also only 41,300. So less than 2.5 lakhs in the case of interstate. In the case of intrastate, within the state Telangana, there is no restriction of the amount. You see here, there are 2 invoices. One is 1,18,000. Okay. Another one is 271, more than 2.5 lakh. Even then, it is more than 2.5 lakh. It is interstate, not interstate. It is intrastate. That means it is B2C small. So this you must be very careful. Interstate 2.5 lakhs above is called B2C large. All others are called B2C small. Okay. And then credit note, debit note. See here, we are a seller. That is, we are supplying the goods and we are returning, showing the sales. In the case of sales, all sales returns, we issue a credit note. Sales returns means that the buyer is a debtor. His account is debited. Now, for other many reasons, we reduce his account. So reducing his account, we give credit note. In some cases, to increase his account, we will issue a debit note. So all the credit notes or debit notes will be shown in the credit or debit notes registered here. You see, debit notes and credit notes will issue. But in this case also, the credit notes and debit note issued to, we are seller, we are issuing to the persons, that is only registered persons, B2B, business to business, registered person. Only the debit notes are created issued by our buyers. That means we are the seller. The debit or credit notes issued by us to a registered person. That is, in the case of the first one, these are all the supplies to a registered person. So to them, if you issue any debit note or credit note, that will be shown here. So in this case, sales means credit. We are the past party is debited. Now to reduce his account, returns or anything, reduce his account we issue a credit note. Credit note means reducing, minus. Debit note means you will increase. So we see here to show everything. See here. So here, credit note means reducing. Credit note. Debit note means his account will be increased. So debit note means increasing. So this is shown as plus. This debit note is shown as. Debit note is increasing plus. Credit note is decreasing, showing as minus. And the net balance taken as 1,02,000 rupees. So 1,02,000 rupees. These details we have to enter. We have to enter the details. That we will enter the details in the system in the tally frame we will issue. So it will take the total. And the same thing, the same details we have to give to the portal. Okay. So this is called debit note or credit or debit notes registered relating to the first category, business to business relating to that. And there are two more. Business to customers. These you see, there are two. That is business to unregistered. Business to customers, B2C, there are two. The second one is debit or credit note, unregistered. So there are two unregistered. What is to enter here? In this case, here, business to business only, registered means only business to business. Get unregistered means not both. This unregistered relates to the first one, business to customer, B2C, large only. Only the credit or debit notes issued by us to the B2C large customers. Only B2C large customers. To them, whatever we issue debit or credit note, that will be entered here. So here we go. What about this? So B2B, we entered here. For B2B, debit notes given to B2B, given against B2B. Similarly, the debit or credit notes given against B2C large, we are entering. So why we enter is B2C small. Why to enter B2C small? So in this case, in the case of B2C small, we cannot show debit or credit notes separately. Credit note means decreasing the amount, decreasing the account, decreasing. Debit note means increasing. So what we have to do is, while entering these are entering. But while entering this B2C small, if there are any credit or debit notes, that is to be adjusted. If there is a credit against a particular bill, if there is a credit note, the amount is to be reduced. If there is a debit note against a bill, the amount is to be increased. So increase that amount or decrease the amount, and net amount only go to enter for each person separately. For each invoice, when you are entering, see if there is any debit note or credit note, we have to adjust the debit or credit note against that invoice. That's why when you are recording the debit note, credit note, and the dispatch details or receipt details, below that there is a column, original invoice number. Against that invoice, we are issuing the debit or credit note. So against that invoice, this debit or credit note is to be adjusted, and the net amount is only to be entered. That is why, in this case, this B2C small invoices, they are called as net of GST, debit or credit notes. That is net amount after adjusting debit and credit notes. Simply it is called net of. Net of debit and credit notes means adjusting the debit and credit notes, only net amount is to be entered in this case. In this case, they are not shown here. B2C registered related to these people shown separately, and B2C is shown separately. B2C unregistered that related to large, there are no debit or credit notes, so there is no amount. But in this case, if there is any debit or credit note, so in this case, if you go see number 4, the numbers, 3 numbers. So in this case, here itself, they will adjust. In this case, we go, so there are 2 invoices. So against this invoice, the amount will be reduced. Suppose B2C small. If there is a credit note for 5,000, so 230 minus 5, 225 will be shown, and the respect to tax also reduced. The taxable value, tax amount, invoice value, everything will be reduced, and the net amount only Rangarao. So against this voucher number 20, that is invoice number 20. In this case, this is the amount, and in this case, we have to reduce, not in the voucher. We should not adjust in the voucher. Here, while entering in this, so we have to take calculation in the Excel. We have to do the calculation, and net amount is to be 225. This 225 is to be entered here. That is called net of debit notes. In this case of BGC small. Okay, and this is registered for the first category, unregistered for the B2C large, and for B2C small, it is that to be adjusted, and net amount is entered, called net of debit and credit notes. Understand this up to these 5 items. Next, sixth one is export invoices. So when you are exporting our goods to other countries, they are called as exports. So in those cases, those exports details invoices as well as other details also. The bill of lading, whatever the documents required for exporting the goods, all the details are to be given here. And not only exporting directly, they are called DE, means direct export. Directly exporting to the other countries, there is one thing in India called Special Economic Zone, SEZ. Cells we call them as simply. In the cells, the companies in the cells, situated in the cells, they are all companies called as sales units. Sales units. They manufacture or buy from others, and they will export all the goods. They will not sell in our country. So by manufacturing or by buying from others, they cannot sell in our country. They have to export. That's why it's called Special Economic Zone. The units in that, companies in that, they will export to other countries only. They will manufacture, they will export. They will buy from others, also they will export. So if we supply to the sales unit, it is exporting only. It is also deemed as export only. It is also deemed as export. So directly exporting, DE, direct export, or supply to a sales unit is also comes under this export invoices. So direct exports as well as supply to sales, everything will be shown in this export invoices. So then when you enter the transactions in the book, the tally automatically comes here. So after this, over 5, 6, number next to 7. Here, tax liability advance received, adjustment of advance, these two. Here in this case, we already learned in the when we are sales, purchase sales. But there are some customers, they may order for the goods and they may pay some advance to us. Against the order, they will pay advance. So that we will make the entry for the advance received, and when we supply the goods, we issue him invoice. In the invoice, this advance will be adjusted, and the balance amount invoice will be for the total amount. But that will be adjusted. New reference will be only for the balance. That is the only amount due from him that will be collected, isn't it? So that we already know. Suppose if you get an advance from customers, and in this month, we have not supplied the goods and we have not issued the invoice, then the advance amount is not adjusted in this month. It is as it is. In that case, when we are filing the GSTR 1, we have to calculate the tax for that advance received also and make adjustment in the books, and that will be, if you make adjustment in the books, that will be shown here. Adjustment, I'm sorry, tax liability advance received. What is the tax amount? The advance is not an invoice. The advance received. On that, what is the tax liability? That will be shown here. That will be paid along with bill to bill. So it will be paid in the liability. The next one is adjustment of advance. Suppose in the last month, we received advance, we have not issued supplied goods and we have not issued invoice. In such a case, that advance will be as it is. So in the last month, just like this, we showed the advance and the tax liability on the advance, we showed in the last month. And in this month, if you supply the goods against that advance, we supply the goods that issue the invoice will be included in this. Invoice will be added in B2B, it will be added. And then here, out of that, what is the amount adjusted? Last month we have paid tax. That is to be adjusted in that. So balance only you have to pay. So what is the amount of tax liability or advance amount adjusted in this month, last month, received last month, and adjusted in the invoice in this month. So in this month issued, invoice issued is added here. And out of that invoice, what is the amount of tax adjusted when you receive the advance? So that will be shown in the adjustment of advance. If you make entry in the book, that will be automatically shown. So these are the things. Okay. So these are the main things. And the last one is nil rated invoices. So you know on the taxable and not taxable. So taxable is tax is to be paid. Nil rated means there are these here. B2C means business to consumer as saying, but it's not consumer only. Consumer as well as unregistered dealer also. In the case of business, called unregistered dealer. In the case of consumer, you don't have a registration. Consumer will have registration. It's called consumer. Consumer and unregistered dealer totally called as B2C. Similarly, in the case of non-taxable goods, there are three types of non-taxable. So everything, all they are called combined. Totally they are called as nil rated. It is not only nil rated. Nil rated when you are making the, giving the GST details in the stock items, taxability we are taking. There we see exempt, nil rated, exempt, taxable. Like that here, nil rated, exempt, and another one is it will not come into the GST. There's no, it will not come into the GST. Like petrol, diesel, and alcohol for human consumption. They are called as non-GST goods. They does not come into the GST purview. They are called non-GST goods. So if you supply them, that is also to be shown, but tax is not be paid. So nil rated as well as exempted as well as non-GST goods. All these will be shown in this. So here if you enter this, here see here there are 21,000. If you enter that, it will show see nil rated, there's one column, nil rated, exempted, non-GST. So respective column it will show. And for all these also, there are 4 items. Interstate supplies to registered person, intrastate supply to registered person, interstate to unregistered. Intrastate is registered person, interstate, intrastate. Unregistered person, intrastate, interstate. All these will be shown in the respective columns. And if you select that, if you enter, you will get the details. And again, if you enter, you will get the voucher. See here, there is no tax. Okay, there is no tax. So here you go to details. And if you select this, you will get these details. You select this, you will get these details. Okay, all these. They are called nil rated. They're simply called nil rated. Not only nil rated, it includes exempted and non-GST also. Okay, and here one very important thing to remember is, I told you taxable goods. Here taxable outward supplies. Taxable outward supplies we are entering here, isn't it? They are these the not taxable goods. Nil rated, exempted, and non-GST means they are not taxable. The taxable goods, all these are taxable only. Here, this is not taxable. They are entered separately. That is why, while preparing the issuing the invoice, if we are dealing, we have taxable goods as well as non-taxable goods, we should not enter both in one invoice. In the same invoice, taxable goods and not taxable goods, if we add, the tax will be calculated in the invoice only on the taxable goods, and the non-taxable goods or exempt goods, tax will not be calculated. But when you show all the items in one invoice, what the system will do is, all the system, it will show the total invoices in the B2B only. In the B2B, taxable, B2B or B2C, whatever. In the taxable only, it will show, it will not show in the data. That is why, when you are preparing that, taxable goods, you have to prepare invoice separately, and non-taxables, you have to prepare invoice separately. And one more thing in the again, when time to come, you learn about that. For taxable goods, we are issuing invoice. It is called as taxable invoice. It is called as tax invoice. You see here, see here. If you take this, see here, go to the print preview. I see here what is come. It is called as tax invoice. It is called as tax invoice. Called as tax invoice because we are collecting tax. So in this case, tax invoice it is called. And if you issue a bill, an invoice, issue invoice without tax, then it is not called as tax invoice. It is called as bill of supply. The bill rated are exempted or non-taxable. It is called for non-taxable will not come under GST. Non-taxable, they will charge only VAT. So leave that up. When you supply, you have to show in this. Okay. And this nil rated and exempted, we have to issue separately. We should not and include the non-GST, nil rated or exempted goods in the taxable goods. Not here separately. Here you see, if you take this. See here, when there is no tax, so it is not called as tax invoice. I just tell you, it is called as bill of supply. Only you are supplying goods. Only the supplying goods, for the supply you are giving the bill. We are not collecting tax. So that's why collecting tax, it is called tax invoice. But when you are giving without tax, we are not collecting tax. In that case, it is called as bill of supply. See, automatically it is showing as bill of supply. Okay, so we should not add tax invoice and bill of supply together. So they must be separate. Only taxable goods, separate invoice, called as tax invoice. Non-taxable goods, separately, we have to issue the bill called bill of supply. You must be very careful. And then here, this one, I told you now, for all these, we have to do the HSN summary, HSR visibility. In that case, the summary you have to take. So there are 29 invoices. For all the 29, one same HSN code we may have for many goods, many invoices. So all this will be taken together and the total amount will be shown. See here, enter that. So these are all this one. Here, these are all the HSC codes. For this code, whatever number of invoices you have, the total of all the invoices will be taken and shown here. And here, 5642 computer. You see here, 2,24,09,000. That means, see here, all these are the details. All these are the details. Here, these are the details, one only. Here, these are the details. Like this, all the details. So, for each HSN code, and for each HSN code with same unit quantity, that is unit quantity code and rate. So, with the same rate, the same quantity code, one number will be taken. If for this same number, there is another quantity code, again it will be shown separately. So one quantity code with same unit, one HSN code with same quantity code and same rate of tax will be shown in a summary. This is called, for each one, if we enter, we will get the details. For each one, we will get the details. But here it will show in the summary. And the next one is document issued. Documents means bills. The bills issued will be shown in this. Here, all these are related to outward supply. See the heading. Invoices for outward supply sales. For this, sales, debit note, again separate debit note, credit note, from this number to this number. How many number totally? And if you cancel any invoice, you have to show this cancel here. See here, there is one cancel here. So there is one cancelled invoice is there. That is why this is cancelled. Total 24, one cancel means automatically we have to enter all this from to a total number and cancel. Automatically it will show the net invoices or net documents. They're called as documents. Net document issued. Like this, you have to do all these. This is one item. Invoices for outward supply. So the invoices for some other purposes, they will be shown separately. So this is content section. Okay. So like this, we have to show, and with the help of this, by saying this is here, enter that, we will know. So according to this number, we'll give this number and names and everything we can enter manually. There are only 29 totally. So manually you can enter in the GST portal in GSTR1. All these tables will be available. In the respective tables, we have to enter this one. B2C invoices. there is one column, one will get. So in that, you have to enter their details. B2C large, you have to enter that. B2C small, or it is called as others, you have to enter. And after entering all these, it will show like it will take the details. So you have to enter all these. So if there are only small number of transactions and invoices, so directly by manually we can enter in the manually you can enter in the GST portal in the GSTR1. Suppose if there are hundreds of transactions, so there are example, these are 229 only, if you have 290. So in the case of 290, so entering all the 290 manually will be a problem. Will be a problem. In such a case, what we can do is the same report. This is the report we are showing. That is GSTR1 report. In the same report, we can directly export to the GST portal. If we export the portal, all the respective columns and everything will be automatically taken by the portal. So we have to export it. The format will may be different. Format is generally, if you want to see that, we can export this in the form of Excel. But here, for the GST portal, do not accept Excel or anything. There is one called JSON. So JSON file, that is the model. So that JSON file only, this will, you have to export this and in JSON file format to the portal, and automatically it will take and it will complete all the columns will be, all the tables, it will be automatically filled out. Okay. To do that directly, that is exporting the invoice and in this GSTR1 report directly to the GST portal for the GSTR1 filing. You see here, no errors should be there. See here, HSN codes, it should be 0. And here, unmatched transactions, uncertain transactions, it also should be 0. So in the next, this is already long day. And with this, I stop this. And tomorrow, 2 and 3 be very simple. In the next video, we will take the next part. We will take the GSTR2 and GSTR3B. In 1 as well as in 2 also, there should not be any problems here. There should not be any problems like, see here, either HSM summary or uncertain transaction. There should not be anything here. In this case also, here, there should not be anything. So uncertain transactions, 0. And invoice mismatch in information, there is one error. Like this, there should not be any error. So if there is any error in this, you cannot upload. Similar in this also, there should not be any errors. This is related to the purchases. And this is related to the sales and purchases. The purchases are also called, they are called as ITC. Sales and ITC. These two are very simple. And I will show some examples also for this incomplete information and uncertain transactions. I make some errors, I may alter that, and I will show some errors, and I will show how to rectify the errors, how to correct the uncertain transactions or incomplete information, or is also called mismatch information, how to correct them. That we will take up in the next class. With this first part, because it's a big one, and you must have thorough knowledge in this. If you have learned this, other two will be very easy. Okay, so this is the thing. With this, we stop today's class, and I wish you all follow my instructions and watch all videos in the same order and gain expert knowledge in become expert accountants. Okay, so I wish you all the best, and bye and good night. We'll meet in the next video. Thank you.